everybody's telling you to create a retirement account. Everybody's telling you to invest in your 401k. Everybody's telling you to invest in your IRA. And really what this does is benefit Wall Street. Today's stocks are at all-time highs, but they're not going to stay at all-time highs for forever. Over a 20-year period, real estate outperformed the S&P 500 by quite a bit. Stock market, if you would have invested $1 million in the stock market in 2000, or if you would have invested $1 million into commercial real estate in 2000, the commercial real estate would have grown by about 377%, while investing into the stock market or S&P 500, you would have grown 174%. One of the most recent deals that we did, it's going to have a 3x equity multiple in just 5 years. Welcome to another episode of the Real Entrepreneur Podcast. My name's Alex Kaufman. Thank you guys for joining. Today we're going to be talking about investing in retirement accounts and the best way to do it. If you have any interest in controlling the outcome and controlling the future of your retirement account, I would say that most people have zero clue what they're invested in inside their retirement accounts. Most people really don't know. Most people contribute to their retirement accounts over, 30, 40, 50-year period, and their employer matches their contributions. Maybe they have somebody who's with the custodian that they're working with, such as Fidelity or anybody else, who's managing their money and putting their money to work, but they have zero idea what they're invested in. And if you are watching this podcast, it's fair to say that you have an interest to control your investments and have an interest in knowing exactly what you're invested in and why, and figuring out how to maximize that for maximum returns. So personally, I'm not invested in a retirement account. I own real estate and I own Bitcoin and Ethereum. Not a whole lot in Bitcoin and Ethereum, but I do own some, and I kind of got stuck in it over the last couple of years, but now it is up and doing better than it was. But real estate has always done very well for me, and that's what we're going to talk about today, is how you can invest in real estate through your retirement account, such as your IRA or your 401k. We're going to talk about highlights and some data today. And we're just going to touch on, which is better, how you can do it. But I've written an ebook that you can have for free if you just go to treuniversity.com/IRA. You can download my free ebook, and it walks you through the exact steps on how to convert your IRA into a self-directed IRA or 401k into self-directed. That way you can start controlling your investments. So inside your IRA or your 401k, most likely what you're doing is you have your investments in mutual funds or ETFs, or somebody's, managing it and putting it in individual stocks. But for the most part, I would say that you're invested in mutual funds or ETFs, exchange traded funds. Now, inside these, you're just tracking the market, right? The average, I had this pulled up here a second ago. Let's see here. I'm going to be working from my computer to get you some data today. But let's see, average fees. All right, so on average, equity funds and mutual funds are historically averaging about 9% a year. That means that you're growing about 9% every single year inside this ETF or inside this mutual fund. Now, different years are better than others, right? If they're going through a recession, it's probably going to be a lot lower. If we're in a bull market and the economy is doing very well, like it has over the last 3 years, today's stocks are at all-time highs, but they're not going to stay at all-time highs for forever. The market's moving cycles, and it's going to be coming down here sometime soon. So, on average, they're receiving about 9% historically every single year. So 9%, boom, compounded every single year. Now, some of these funds pay cash flow. They pay dividends. Some don't. I'd say that it's most likely that you're invested in something that does not pay a dividend, unless you have specifically asked somebody to invest you into, a dividend-paying ETF or a dividend-paying mutual fund. Now, 9% a year is pretty good, right? But you're collected over this, let's say you're invested in the SPY. Basically what you're doing is you're tracking the entire S&P 500. And so when the S&P 500 goes up, your SPY mutual fund or ETF, it also goes up, right? Now, you don't have to do that though. So if you want to take control of your investments, what you can do is you can convert your IRA or your 401k or your Roth IRA into a self-directed retirement account. And what this means is that you get to choose where you want to place your money. So inside your retirement account, you can lend money to people, like you can give hard money loans to people. You can invest in real estate. You can buy rental properties. You can buy commercial properties. You can invest in funds and syndications. And I would say that real estate is probably the better place to put your money than following the S&P 500. Here is a graph this is from 2020. This is all I could find for a graph. But this is from 2000 to 2020. Over a 20-year period, real estate outperformed the S&P 500 by quite a bit. So over the last 20 years, commercial real estate, let's see. Stock market, if you would have invested $1 million in the stock market in 2000, or if you would have invested $1 million in a commercial real estate in 2000, the commercial real estate would have grown by about 377%, while investing into the stock market or S&P 500 is what it's tracking here, you would have grown 174%. So pretty much double what the S&P 500 did over a 20-year period. Now, that's important for a few reasons. Number one is you're trying to maximize your returns here, right? So there's different types of benefits that you get by investing in real estate, especially inside of your retirement account. Number one is you do get cash flow if you're investing in good assets with good operators, or you yourself are a good operator. So you get cash flow every single month, every single quarter, semi-annually or annually, right? You're also going to get the appreciation and forced appreciation. So with the S&P 500, if you're investing in a mutual fund there, you're just getting the appreciation, right? You're not getting any cash flow from any of these companies that have any cash flow. If you're invested in the ETF or the mutual fund that's tracking the S&P 500, you're strictly just getting the appreciation that it gets every year, that 9%. Now, commercial real estate can appreciate quite a bit more historically than 9% per year. If you take this, let's see here. If you take this 377 divided by 20, it's about 18.85% year over year forced appreciation. Now, this is just the average, right? So it's taken into consideration, losers, taken into consideration a lot of the winners, and it's bringing us an average here. But if you buy deals that have the ability to increase substantially the value by raising the net operating income on commercial real estate investments, you can substantially increase those returns by quite a lot. For example, one of the most recent deals that we did, it's going to have a 3x equity multiple in just 5 years. So that means if you invested $1 million in 5 years, we would have paid you back $3 million, including your original investment of $1 million. So you would have gained $2 million on top of your $1 million over 5 years. That's pretty substantial. You're not going to get that in the S&P 500. And you also get cash flow, you get the appreciation and the benefits that real estate has to provide. So number one, that's a main reason why you should do it right there. Let's see here, mutual funds versus real estate. What are most retirement accounts invested in? We kind of went through that, but most people are invested in mutual funds, exchange traded funds, stocks, bonds, etc. Here's the other thing about retirement accounts is, everybody's telling you to create a retirement account. Everybody's telling you to invest in your 401k. Everybody's telling you to invest in your IRA. And really what this does is benefit Wall Street. Wall Street gets paid a ton of fees on your investments. They get paid to manage these funds. They get paid to process your orders. They get paid to oversee the assets. And so let's see how much money is in here. How much money? Here we go. Average retirement savings in the United States. Okay. All right. Got it. Total retirement accounts 2024. Come on, let me get the number. Total IRA investments 2024. Why is it not telling me? There's something like $15 trillion or something. Anyways, I can't find it, but there's something like $15 trillion in retirement accounts right now. Sorry, this is as of 2023 fourth quarter. $38.4 trillion in total U.S. retirement assets. IRAs, 401ks, Roth IRAs, etc. So everybody's been telling you to put your money in a Roth IRA, 401k. And really what it does is it serves Wall Street. I mean, sure, your money grows if you have somebody who's watching it and overseeing it. But it's an easy way out for people who are, lazy and don't want to manage their own investments, or B, don't have the desire to, or C, don't have the knowledge to. And they're just kind of following, what other people and the institutions are telling them to do. And so when you have $38.4 trillion invested into these retirement accounts, I mean, who do you think it's benefiting? It might benefit you, but really what it's doing is it's benefiting all the companies and the institutions that are there to put your money to work, right? They're going to get rich off you just putting your money with them and not overseeing what you're investing in. Now, you can take your IRA, your 401k, your Roth IRA, you can convert it into a self-directed IRA, and you can start investing in real estate, your own assets that you control. You could take it today. You could get out of your stocks, out of your bonds, your mutual funds, your ETFs. You could contact a custodian who can walk you through the process. It's pretty simple of converting it. And then you could immediately take this money and go buy a 20-unit apartment complex. You could go buy a 4-unit fourplex. You could go buy a commercial building. You could go buy whatever you want. You could take that money and you could lend it out to people who are buying real estate on short-term loans, hard money loans, 12, 13, 14, 15% interest, interest-only loans. And if they default, you can take the asset into your IRA and it is your asset. So you can start taking control of your retirement. You can start taking control of your family and your financial future and where you plan on being when you retire, or you can just continue to give your money to Wall Street and trust that they're going to do what's best for you and for your family. But what are most retirement accounts invested in? Tax rate, mutual fund return, average fees for mutual funds. Anyways, that's what I would recommend doing. If you have money stored away into your IRA, your 401k, your Roth IRA, I would tell you to consider converting that into a self-directed account. That way you can start investing into real estate. Like I said, you can do a lot of things with it. You can still invest in stocks and bonds and all that stuff if you want to, but you'll also have the ability to buy real estate with it. You can invest in syndications with it. You can lend out money with it. But the main thing is that you're in complete control. And if you want to turn that $1 million into, $4.2 million versus the $2.7 million, I would recommend you start looking at how you can convert this and start controlling your assets. Now, you don't have to be an expert at real estate investing to do this, but you have the option to do so. And that's why you're joining this podcast. That's why you're joining the trainings. You're coming to the boot camp, is you're looking to start gaining that knowledge and that education to start placing your money wisely to get it to grow, to take care of you and your family. Like I said, we're not going to go into every single detail of how to convert it today, but I do have a free ebook that you can download. Just go to treuniversity.com/IRA to download our ebook that shows you the benefits of doing this, shows you how to do it, shows you which people to contact, shows you the steps to take, shows you what you should consider beforehand, and shows you what to do afterwards so that you can start taking control of your retirement and setting you and your family up for your future. All right. Well, what I want you to do is pull out your phone, pull out your computer, go to treuniversity.com/IRA, download that ebook, and just start there. There's a lot of actionable steps you can take. You can watch YouTube videos about it. You can read a bunch of articles about it. Many people are doing this. Most people don't know about it. And it's a good strategy for you to start taking control of your retirement. So just take one step at a time, download the ebook, and reach out to us if you have any questions, and we'll help you out as much as we can. We do have TR3 Capital Fund 3 open. If you want to look at what it's like to invest with us and partner with us on the deals that we're buying, just go to tr3capital.com. If you're here in the Austin area, next Friday, June 28th, we do have our monthly networking event. It's going to be at the Alcove Cantina here in the Austin area. And also, we have our monthly boot camp coming up in July. If you have any interest at all to learn about how to start investing in commercial real estate, finding the deals, what to look for in deals, what markets to focus on, what market data you need to know, what softwares you need to use, how to analyze these deals, how to write and underwrite offers, to write a contract and LOI and send it. I'm going to walk you through that process over a 3-day period from step A to step Z on finding, locating, analyzing, underwriting, negotiating, and sending an offer on a deal that could change your life. It's called the One Deal Away Bootcamp. Just go to treuniversity.com/1deal, and I'll see you next week.